Political risk has been a major challenge for investors this year, whether it's Brexit and an uncertain future for the European Union, the US presidential election, or increasing assertiveness by Russia and China. It's difficult for investors to stay ahead of the curve. Add to that the spread of negative interest rates in developed economies and volatility in the currency markets, and the choices facing investors can be bewildering. So what should they do? Find out with UBS Wealth Management. Stock markets bore the brunt of the Brexit decision on June 24th as the future of the EU was thrown into doubt.
But the way that the market initially sold off was in line with our expectations of a Brexit scenario. Now, right now, what we think will happen is that the United Kingdom will remain a member of the EU for at least 2 years, from the time that it triggers Article 50 of the Lisbon Treaty, which starts the formal process for exit. But the reality is that the economic shock to the UK itself will be felt rather immediately. We think that growth will grind to a halt in the UK in the second half of 2016, and at the same time, the British pound is likely to continue to be under pressure. With regards to the EU, we do believe that this leave decision itself will likely shave off about 30 basis points of GDP growth for 2017. And in terms of the uncertainty that will continue to prevail, this will be with regards to the UK domestic politics, the state of the negotiation between the UK and the EU itself. It will be long and complicated. It's not clear at this point whether it will be amicable or confrontational. And at the same time, I think questions will continue to be asked about the state of integration of the EU. Will this decision result in ever closer integration, or perhaps even the disintegration of the EU over time?
The vote in the UK was followed by tumbling stock markets and doom-laden warnings of a return of the financial crisis. But this time, policymakers were ready to act.
We do not believe that the Brexit decision will result in another global financial crisis, not with global central banks standing ready with global coordinated monetary action. And at the same time, we think that there is sufficient momentum among global consumers to actually avert a recession. Our view is that the United States, for instance, growth will be resilient, even if moderate, and even in the EU. European consumers are quite resilient, and in many parts of Asia as well, consumption spending has continued to be quite robust.
Even so, the next few months could be challenging. Investors should avoid the temptation to step back from participating in the markets.
Now, our sense is that uncertainty will prevail and the markets will remain very volatile. But sitting on our hands and in cash, it's not going to be a viable solution. The reason is because we do believe that the global monetary policy setting today is even more extreme than in the immediate aftermath of the 2008 financial crisis. So for instance, if you look at negative interest rates policy, it was pioneered by Denmark in July of 2012, and it has become a lot more common globally. In fact, this policy now applies in countries accounting for about 25% of global GDP growth. And what's worse, about 12 trillion worth of government papers today trades below zero yield. Now, what this means is that if these securities are purchased today and held to maturity, a loss is guaranteed unless interest rates continue to fall ever more negative. So the reality is this very low interest rates environment will persist. Monetary policy setting will stay looser for longer, and therefore investors do need to think of ways to actually capture returns, either by diversifying globally or by trying to capture returns in riskier assets, whether in credit or in alternatives. And from our perspective, even though the volatility will persist, there continue to be areas of resilience globally that will support investment cases into specific regions and into specific asset classes.
For more information, go to www.ubs.com/houseview.